Hi everyone, I'm Matt from Look Into Bitcoin, and today we're going to be looking at Bitcoin and the Fibonacci sequence. To do this, we'll be using a number of resources that are all freely available on lookintobitcoin.com, your number one source for Bitcoin information. And if you haven't already, don't forget to like the video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it's released. So right now we're just here on the Look Into Bitcoin site, and specifically the golden ratio multiplier chart we have here on lookintobitcoin.com. And the golden ratio multiplier is taking a 350-day moving average of Bitcoin, so the previous 350 days of price action. We just average out that average closing price of those 350 days or almost a year, and multiply that moving average value by what we would call a Fibonacci sequence. So the Fibonacci sequence traditionally is a mathematical sequence which uses the sum of the two previous numbers to calculate the next number. So 1, then 2, then 3, then 5, etc. And we can use this Fibonacci sequence to try and calculate and better use this multiple within our trading and investing. So this golden ratio multiple is using traditional Fibonacci numbers for its multiplications of this moving average. So we have 1.6, 2, 3, and 5, etc. So if we just go down, we have a little bit more of the calculation and methodology behind this. But ultimately, if we can zoom in a little bit here, it actually shows that through all of Bitcoin's cycles, it has actually predicted the price peak with a great deal of accuracy. We can see here it reached the 5 times, and then in the most recent cycle, 3 times multiple of this average. So every time it's actually reaching a lower multiple, but ultimately it really is quite accurate at predicting not only the price peaks, but also significant levels of support and resistance throughout Bitcoin cycles, and also as a great indication of whether we're in a bull or bear cycle just by looking at whether we're beneath this 350-day moving average. But if we just go into TradingView here, we can see I've got this indicator loaded up, the golden ratio multiplier. So if you have a premium Look Into Bitcoin subscription, you can actually gain access to all of our TradingView indicators very easily, apply them to your own charts and see them impacting on all different time frames. So very useful. But if I just go onto the weekly time frame here, what we can actually do is, along with this golden ratio multiplier of moving averages, we can actually apply a Fibonacci retracement tool, which is a built-in TradingView function, to actually see and potentially predict where Bitcoin's price peaks may next occur. Because while the 350-day moving average and its multiples have a very accurately provided price peaks and other levels of support and resistance throughout Bitcoin's market cycles, we can't actually predict where those levels are going to be months or even years in advance. We kind of have to wait and react to when price reaches them and whatever price they set at when price does reach them. But what we can do, as I said, is use this Fibonacci retracement tool to almost try and look into the future to gain an insight before the price action actually occurs, what might happen next and where Bitcoin may find some interesting price action at certain key levels. So to begin with, here I've just loaded up this Fibonacci multiplier on the first Bitcoin cycle we had, so all the way back in 2011, 2012. And what you can actually do, this Fibonacci tool here, if I just press on, you'll actually see the settings I've got just in case you want to recreate this. You can actually go on, add in the extended Fibonacci levels. And the way I do it is click on the Fibonacci tool, connect a cycle low on the weekly chart to a cycle peak, just as I've done here. And then we can actually see, going above the current price peak, potential topping prices for the Bitcoin price action. So if we just zoom out a bit here, we can actually see, if we drew this Fibonacci retracement on maybe a few months in at 2012, we could predict multiple years in advance where Bitcoin may have some, as we said, interesting price action. So we can see the first run up and retracement we had hit this 618, very key Fibonacci level, before retracing, finding support and running up again to this 1.236 Fibonacci extension level. It actually predicted the price peak to within just a few dollars, months, even years in advance. And this isn't just a one-off fluke. This happens multiple times. So if I just hide this one and add in the Fibonacci of the next cycle, so again we peaked here at about $1,200. If we connect that to the cycle low and zoom out a little bit here, we can see, if we just zoom in, all the way predicted back in 2015, zooming into the 2017 price peak. If we look here to the 1.382 Fibonacci extension, which predicted a price peak at $19,970. Again, this was just a few dollars off. Now, there are some little caveats with this methodology. We can actually predict predict exactly what level price is going to peak out or which level is going to be of key points of interest. But what we can do is when price is approaching these levels, maybe just look at other charts, other metrics we have for Confluence to try and gain a little bit of insight into what may happen next and just better manage our risk. We can see after price retraced, again, this was going back from a calculation we made in 2015. We could see price found support and resistance at the 0.786 and 1 level of the Fibonacci extension. So these lines held very true and had a huge influence on price years and years after they actually were originally drawn out. And once more, if I just hide this and once again add on the most recent cycle we can draw to actually see how accurate it was, the 2017 to 2018, maybe into 2019 bear cycle, we can see if we just connect the peak and the bottom on price here and zoom in a little bit again, we can see in the most recent bull cycle we had here, this 0.618 level again, predicting to within just a few $1,000s, but a few percent of the price peak where price topped out. And again, predicted where we retraced to, where we bounced from, and again, provided huge key levels that we really should have been paying attention to from calculations we made years and years ago. So this really is a really interesting point to look at. Maybe many long-term influential big players in the market are watching these levels as key points of interest, either for accumulation or distribution, which is all pretty absurd just considering that these are multiplications of a mathematical sequence that is God knows how old, incredibly old. So what we can do is, again, remove this, and if we add on a Fibonacci retracement to the most recent cycle we've had from the price peak we had in late 2021 to the price, hopefully, bottom we've set in late 2022, we can see the potential price levels that are going to have a big impact. And we can already see these are sort of coming into effect as we sort of hover around this 0.618 level again. Price is really starting to try and figure out if we're going to break up or potentially hover beneath this for a little bit. But if we just scroll up, we could potentially see price topping out at a 0.236 level, which is 98,000, just beneath $100,000. 0.382, which would be $122,000, or maybe even higher, the 0.5, $145,000 or $173,000, 0.618, which has actually been a pretty key level in historic cycles. So just a very interesting thing to know. And again, combining this with something like the golden ratio multiplier, what we could actually do is use these as confluence. So once we get strong signals from both of them, as price is reaching one of these upper golden multiplier bands, and as that is lining up with one of these Fibonacci extension levels, this is a great area to watch and potentially take profit in the next cycle. So just to summarize, the Fibonacci sequence is a mathematical sequence in which each number is the sum of the two preceding ones, like we discussed in the example before, 1, 1, 2, 3, 5, 8, etc. So we can use this logic within our Bitcoin investing and analysis to predict and react to potentially key levels of support and resistance in the Bitcoin price. And tools such as the golden ratio multiplier have historically predicted Bitcoin price peaks, and coinciding with Fibonacci retracement or extension levels on the chart can help us pinpoint future turning points for Bitcoin. If you like this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to get access to live charts, in-depth newsletters, indicator alerts, private trading view scripts, and more, all for a fraction of the standard industry price. And let me know in the comments down below and on social media, do you believe in these type of technical analysis levels, or do you think it's all just random coincidence and we shouldn't really be looking at this? We should be focusing more on on-chain metrics. If so, let me know in the comments down below and on social media. I look forward to reading and replying to all of them. Thank you very much for watching, and I'll see you in the next one.